Hello everyone and welcome to today's lecture. Hello everyone and welcome to today's. In the last lecture, we completed essay 600. Now we will be taking the question of essay 600. I'll request everyone to ask shift to the rest of to the principal and the component auditor, and how a principal auditor can rely upon the component auditor. Okay. So let me show you one more thing for you guys, as I promised in the last lecture that I'll show you with respect to the report, how the reporting is done. Remember, I discussed about in other matters paragraph SA7 as per SA 705 and relevant essays, how we report in SA 706, how we report basically in other matter paragraph. Okay, that the other information with respect to whatever areas that has been audited, not audited by the principal audited, but audited by some other auditor. Okay, so how we audit that particular area. Okay, so how we audit that particular area of other matters, like for example, let's say the principal auditor might not be auditing the components of ABC, and how he report about the components where he has not audited the components, but the other auditor has audited the components. Okay, so in that case, this is the one of the example that I'm showing to you guys of one of the audit report wherein how it has been reported in other matter paragraph. See, so we did not audit the financial statement of 41 subsidiaries whose financial statements reflect total asset value of this much lakhs at 31 March 2020, total revenue of this much lakh, and net cash flow of this much for the year ended in consolidated financial statement. The consolidated financial statement also include the group's share of net loss and other comprehensive income of nil for the year ended 31st March 2020. In respect of 3 associates whose financial statement have not been audited by us, these financial statements have been audited by other auditors whose report have been furnished to us by management, and our opinion on the consolidated financial statement insofar relates to the amount disclosure included in respect of these subsidiaries and associates, and our report in terms of subsection 3 of 143 of the Act insofar relate to the aforesaid subsidiaries and associate is based solely on the audit reports of other auditor. Means that they are saying that the consolidated financial statement where they relied upon the component financials, over there they have solely relied upon the financials and the reports that have been shared by the component auditor. Plus they provide the detail, for example, total assets, total revenue, net cash flow, in the consolidated financial statement from the subsidiaries. So that is they are providing that they have not audited, but they have audited by someone else. So they have not been audited by us. These financials have been audited by other auditors. So this is how in audit report we are required to refer to the work performed by the component auditor or other auditor. Any doubt? Okay. Now let's go back to the questions. We'll discuss some of the questions and then we'll move forward. The first question is, B is the principal auditor of ABC and Company with 8 branches audited by 8 branch auditors. B wanted to ensure that the work of a branch auditor were adequate for the purpose of his audit. Hence, he insisted on the branch auditor to get familiar with the checklist he prepared for the branches. Besides, he required them to share the working papers compiled by them for his review and return. Is principal auditor within his right for asking such, sharing such work paper? So you tell me, guys, whether principal auditor can ask the work paper, like, from component auditor, whether he is within the rights. Come on. So there are two things basically over here. One is checklist to be filled. Second is work papers of component auditor to be shared. Now, what he can do and what he cannot, like what is within his rights. Come on, guys. Pretty easy. Whether he can or he cannot, checklist and work papers. Okay, good, Kaushiki. Okay, Sumit. Correct, Manini. Okay, good, Kaushiki. Okay, so with respect to the work paper, see, there are two things here. Number one, now when I talk about work paper, it's not only the essay that we are discussing, but other essays also come into the picture. Okay, so when I talk about the work papers he cannot ask, because work papers are the proprietary right of the component auditor. Okay, so if something is proprietary, or a right, or you can say right of the component auditor, then he cannot ask. Basically, if you see SA 230 and SQC 1, over there also it's specifically mentioned that unless otherwise specified by the law, audit documentation, that is the work paper, is the property of the auditor, or here it will be the component auditor. Okay, now it is also specified that the component auditor at his discretion can take out the portions and extract from the audit documentation, and then can provide, but such disclosure should not undermine the validity or the work performed by the component auditor. So in that case, in summary, it is the property of the component auditor. And if that is something the property of the component auditor, principal auditor cannot ask something from the component auditor which is the property of the component auditor. However, when I talk about the checklist, yes, checklist can be, because that becomes some sort of an extract or summary that is required to be prepared as a part of the to reporting to the principal auditor. So let us see the answer. Using the work of another auditor, when the accounts of the branch are audited by a person other than the company's auditor, there is a need for clear understanding of the role of such auditor and the company's auditor in relation to the audit of the accounts of the branch and the audit of the company as a whole. Also, there is a great necessity for the proper rapport between these two auditors, the coordination and the liaison, for the purpose of an effective audit. In recognition of these needs, the Council of the Institute of Chartered Accountants of India has dealt with these issues in Essay 600, using the work of another auditor. It makes clear that in certain situations, the statute governing the entity may confer a right on the principal auditor to visit a component and examine the books of account and other records of the said component, if he thinks it is necessary to do so. where another auditor has appointed the component, the principal auditor would normally be entitled to rely upon the work of such auditor unless there is a special circumstances to make it essential for him to visit the component or to examine the books of account and other records of the component. Further, if he requires that the principal auditor should perform the procedure to obtain sufficient and appropriate audit evidence that the work of other auditor is adequate for the purpose of principal auditor's purpose in the context of the specific assignment, and when using the work of another auditor, the principal auditor should originally perform the following procedure. Means he is required to perform certain procedures first, to ensure that the work that is performed by the component auditor, he can rely upon that. Advise the other auditor of use that is to be made of the other auditor's work report and make sufficient arrangement for the coordination of their effort at the planning stage of the audit. The principal auditor would inform the other auditor of the matters such as area requiring special consideration, procedures for identification of intercomponent transactions that may require disclosure, and the timetable for completion of audit. Advise the other auditor of the significant accounting, auditing, reporting requirements and obtain representation as to compliance with them. The principal auditor might discuss with the other auditor the audit procedures applied or a written summary of the other audit procedures and findings, which may be in the form of completed questionnaire or checklist. The principal auditor may also wish to visit other auditor. The nature, timing and extent of the procedure will depend upon the circumstances of the engagement and the principal auditor's knowledge of the professional competency of other auditor. This knowledge may have been enhanced from the review of the previous audit work of the other auditor. Now, this was with the checklist. So we principal auditor can ask for the checklist. If I show you here, the principal auditor might discuss the other auditor, the audit procedure applied, or the review or written summary of the other auditor's procedure and finding, which may be in the form of completed questionnaire or the checklist. Now let's talk about the audit documentation or work papers. Further, SA 230 issued by ICA on the audit documentation and standard quality control and standard on quality control SQC 1, quality control for the firms that perform audit and review of historical financial information and other assurance and related engagement issued by institute provide that unless otherwise specified by law or regulation, audit documentation is the property of the auditor. He may at his discretion make proportions out of it or extracts from the audit documentation that are available to the audit documentation and make available to the client, provided such disclosure does not undermine the validity of the work performed or, in the case of assurance engagement, the independence of the auditor or his personnel. In the light of aforesaid, principal auditor was not within his right for asking or sharing such work paper. It depends upon the discretion of the auditor. Okay, so with respect to the work paper, it depends upon the discretion of the auditor. He can ask checklist, but he cannot ask the work papers to be shared. Any doubt with respect to this? Any doubt? Okay. Let me take one more question. So there was a short note to be written. Write a short note on the following. Reporting in case of parent company auditor is not the auditor of all its component. So what is it? This is basically, it talks about reporting in case of parent company auditor is not auditor of all of its component. That is, that we are required to report, we are required to write a short note on that, how a parent company auditor can rely upon the component auditor and how they are different. So let's see the answer. In case where the parent auditor is not the auditor of all of the component included in the consolidated financial statement, the auditor of the consolidated financial statement should also consider the requirement of SA 600. As prescribed in SA 700, if auditor considers it necessary to make reference to the audit of the other auditor, the audit report on the consolidated financial statement should disclose clearly the magnitude of the portion of the financial statement audited by the other auditor. See here, magnitude of the portion of the financial statement audited by the other auditor. When I talk about magnitude, I talk about, total revenue, total asset, net cash flow. So I report all these three things. I talk about the magnitude. And this may be done by stating aggregated rupee amount of percentage of total assets, revenue and cash flow from the component included in the consolidated financial statement, not audited by the parent auditor. If you see over here, in my example, I talked about total asset, total revenue and net cash flow that were not audited by the component auditor or the principal auditor, but it was audited by some other auditor. Total asset, revenue, cash flow not audited by the parent auditor should be presented before giving effect to the permanent current period consolidated adjustment. Means these revenues are presented before giving effect to the permanent adjustment. So let's say, for example, your total revenue, is rupees 500 crores. Okay, in a component A. Now, intercompany sales. Now I'm doing a consolidation, so I'll eliminate all the intercompany transactions. Let's say intercompany sales. I reduced, let's say 20 CR or let's say 100 CR. So there was a good intercompany. I reduced the 100 CR intercompany sale of component A, which was sold to the parent. Now the net revenue is 400 crores. Okay. Now this 400 crores net revenue, I am not required to report in my audit report, but I'll be reporting this before any intercompany adjustment. So the revenue that I need to report, the total revenue, total asset, or the net cash flow, is before my permanent current period consolidation adjustment. Basically, amount, those are part of your standalone financial statement. Means amount that are there in the standalone financial statement before any current period consolidation adjustment or permanent consolidation adjustment. So that is 500 CR, not 400 CR. Then reference in the audit report of the auditor on the consolidated financial statement to the fact that the part of the audit of the group was made by other auditors. See, here we saw that part that this was not audited by us. These financial statements have been audited by other auditors. So this audited by other auditors is the reference that we are making in our audit report. So other auditors is not to be construed as a qualification on the opinion, but rather as an indication of the divided responsibility between the auditor and the parent and subsidiary. That's why it's given in the other matter paragraph, not in the qualification. Clear? Any doubt? Any doubts? Okay. If no further doubts, Then let's proceed further. There is one more question I want to cover for this particular topic. PQ Limited, a listed entity headquarters in Mumbai, is having 15 branches all over India. The company is in the business of buying paddy grown by farmers directly and processing to produce final products for selling domestic as well as international market. PQ Limited appointed 4 firms of chartered accountant for audit of its head office and branches. Your firm is one of the firms. It was agreed that your firm will act as a principal auditor. What factors to be considered while you accept the position of the principal auditor? So you need to tell me what are the factors that firm needs to consider before accepting the portion as a principal auditor. That what they are required to consider before they accept as the position of a principal auditor. Come on, guys. We discussed this in last lecture also. Like what are the areas where the which are required to be considered before accepting the position as a principal auditor or position as a principal auditor? What are the areas that the principal auditor should consider before accepting his position as a principal auditor? Come on, guys. Okay, good, Sumit. So before considering his position as a principal auditor, what are the things that he is required to look into first? See, before a auditor accept as his position as a principal auditor, what he needs to see is the portion that he is going to audit, the risk in the financial statement that he is going to audit. Okay, the knowledge about the entity and its business. Okay, then there are other factors like the procedures that he is going to perform. So let us see. So factors that are to be considered while accepting the position as a principal auditor. Okay, SA 600, using the work of another auditor. While accepting the position as a principal auditor, the auditor should consider whether auditor's own participation is sufficient to be able to act as the principal auditor. Okay, for this purpose, the materiality of the portion of financial information, principal auditor's degree of knowledge regarding the business, risk of material misstatement in financial information of the component audited by the other auditors, the performance of the additional procedure as set out in the essay regarding the component audited by other auditors, resulting in principal auditor having significant participation in such audit. These are the factors which are required to be considered by the principal auditor before he accepts as a position of the principal auditor. Basically, if I summarize, materiality, knowledge, okay, risk, and additional procedures. So these are the four things: materiality, knowledge, risk, and additional procedures that the principal auditor needs to consider. Clear? Or you can simply write down like this way. MARK. Okay, that is materiality. A for additional procedures, R for risk, and K for knowledge. Mark, basically. So what are the factors that the principal auditor needs to consider before accepting position as the principal auditor? That's the mark: materiality, additional procedure, risk, and knowledge. Okay. Now, one more question I want to cover. It was asked in one of the previous exam, and very good question. It was for the 5 marks. Just a minute. Okay. So the question is, CAH was appointed as the statutory auditor of MNL Limited, a listed company which has 3 subsidiaries, namely M Limited, N Limited, L Limited, and also 15 branches across India. Auditors are duly appointed for these subsidiaries and branches as well. With regard to the determination of the materiality during the audit of consolidated financial statement, what should be the consideration of CAH? How he should deal in his report if there are observations, for instance, modification and emphasis of matter in accordance with SA 705-706 made by the component auditor. It is not only linked with the SA 608, but it talks about the qualifications and the modifications which are there in the component auditor. So let's bifurcate into two portions, this particular portion. Okay. The first part, that what should be the considerations of CAH when he's determining of the materiality during the audit of consolidated financial statement. Okay. So if he is determining the materiality during the audit of consolidated financial statement, what should be the considerations? What he should consider with respect to the materiality? You tell me, guys, what he should consider with respect to the materiality point of view first. There is one question in above question, like this one, these steps, MARK. Okay. Whether this will be checked by the principal auditor, answer is yes. This will be checked by the principal auditor. Okay. So coming back to this question, what are the factors that the auditor needs to consider with respect to the materiality in case of consolidated audit of consolidated financial statement? Come on, guys. What are the factors he need to consider? Okay, how you will consider in materiality in case of a group audit of a consolidated financial statement? How will you consider the materiality? How calculate the materiality or determine the materiality? When you are auditing consolidated financial statement, what you will do to calculate the materiality for the consolidated financial statement? Come on, guys. How will you determine the materiality in case of a consolidated financial statement? So what first steps or steps you will be performing? Okay. Correct, Manni? Correct. So when you are calculating the materiality for the consolidated financial statement, okay, what you will be looking is you will be looking at as a whole, group as a whole, not an individual but group as a whole. Reason because we are calculating materiality as a consolidated level. So auditor is required to compute the materiality for the group as a whole first. Okay, like taking all the revenues, and accordingly I will be calculating the materiality. So let us see. CAH should consider the requirement of SA 600 using work of another auditor. If he decides to use the work of another auditor in relation to the audit of consolidated financial statement, and he should comply with the requirement of SA 600. In carrying out the audit of the standalone financial statement, the computation of materiality for the purpose of issuing an opinion on the standalone financial statement of each component would be done component wise on a standalone basis. Okay, so when I'll calculate on a standalone basis, I'll do component wise. However, with regard to the determination of materiality during the audit of consolidated financial statement, the auditor should consider the following. The auditor is required to compute the materiality for the group as a whole. See, compute the materiality for the group as a whole. This materiality should be used to assess the appropriateness of the consolidated adjustment, like permanent consolidation adjustment and current period consolidation adjustment that are made by the management in preparation of CFS. The parent auditor can use the materiality computed on the group level to determine whether the component financial statement are material to the group, to determine whether they should be scope in additional components, and consider using the work of other auditor as applicable. So second thing is, parent can use materiality computed on the group level to determine whether the component financial statement are material or not. Then principal auditor should also compute materiality for each component and communicate to the component auditor. Third step is you need to calculate materiality for each component and communicate to component auditor. So these are the three steps you need to perform with respect to the computing the materiality in the case of consolidated financial statement. Now, however, while considering the observations, the second part of the question was that how we are required to deal with the observations, instance of modification or emphasis of matter paragraph in accordance with SA 600, 705 or 706 made by the component auditor. So when I talk about the observations, so in that case, the observations of the component auditor in his report on the standalone financial statement, the principal auditor is required to consider, that is with the requirement of SA 600 with respect to how he has responded to the observation. So see, when we were discussing SA 600, we specifically talk about how to take care about the observations. So okay, where the other auditor's audit report is modified, the principal auditor should also document how he has dealt with the qualifications or adverse remarks contained in the auditor report in framing his report. Means he needs to consider, and he needs to document that how he has dealt with the observations in the component auditor and whether he is satisfied or not. So that is how he is required to report upon the component auditor's observation. Clear? Any doubts till now? Any doubts? Okay. If no further doubts, so yeah, so there is one doubt. How about dealing the observation? Simple. See, let's say for example, observations are there in component audit report. Let's say I'm drafting one observation so that you can see the observations. Usually I'll show you that how observations are dealt with. Let's say for example, there is an observation in component auditor report that during the audit of financial statement, okay, let's say of component A, at that particular point in time, they will not write component A, but they will write the name of entity. Let's say for example, ABC Limited. Okay. During the audit of financial statement of ABC Limited, it was identified that management has not disclosed the impact of pending litigations, which is currently at dispute, which is currently pending at National Green Tribunal. Okay. As per the assessment performed by the auditors or by us as an auditor, as per the assessment performed by us, the management can have an outflow of rupees, let's say for example 50 crores for liability or for penalty and interest. On account of non-violation, on account of non-compliance. Okay, let's say for example, this is one particular observation that is there in the component audit report. Now the question comes is, how as an consolidated auditor of the consolidated financial statement or the parent auditor should consider this observation. Number one, to consider or to deal with observation, I need to see two things from this observation. Group materiality. Let's say my group materiality is 200 crores. Okay, group materiality is 200 crores. Now the individual materiality, component materiality or component A's materiality, let's say was rupees 50 crores. Okay, there are limited number of components, but this is a major component. So group materiality 200 crore, component materiality, A materiality 50 crores. Now, when I will consolidate the financial, prepare a consolidated financial statement, this particular thing will also come into the consolidation. This is not an intercompany thing, and this will not go by any intercompany elimination. So this will be part of my consolidated financial statement also. But whether this will be material enough to modify my opinion, as per the materiality, my materiality, group materiality is 200 crores. Okay. Let's say 2000 crores is the group materiality, overall materiality. Performance materiality, let's say 10% of this, 200 crores. Now, in compared to the 200 crores performance materiality, this 50 crores, whether this is, what I can say, material enough to modify my opinion. Now for the component materiality, the overall materiality of 50 crores and let's say performance materiality of 10 crores. So they may, let's say for example, based on this materiality, the component materiality, the component auditor issued what you can say adverse opinion. So they can have this, for example, here, basis of adverse opinion, because for them, okay, because for them this particular this particular thing was very important, very material, and that's why they had to what you can say, had to put an adverse opinion considering the amount. But in our case, in the case of group, is it that much material enough to modify my particular what you can say opinion to the adverse opinion? Answer is no. In that case, I need to document, okay, 50 CR, it's the amount. I can even think about qualifying, but here it is below my performance materiality. This observation with individually or collectively with other observations. I need to check with the other observations also. Okay, let's say there are no other observations. So this observation individually or collectively with other observations, okay, is not material enough which could impact the decision making of the reader, and hence I can say that okay, no further observation or no further qualification has been made in the consolidated financial statement. So this is how it has been dealt. This is how actually things are dealt when there is an observation of the component observation in the component auditor's audit report. So this will not come. So what I will do is then I will not include this observation in consolidated financial statement audit report. Reason because of the materiality and other factors that I told you right now. Clear? Any doubt with respect to this? Any doubt? Okay. If no further doubts, then what I propose is let's move to the next standard. SA 6 and 10. Okay, just a minute. Rather than going into the detail for this particular standard, I'll provide an overview using the work of an internal audit. Okay, I'll provide an overview and then we'll move to the question for this particular standard. Okay. Now, when I talk about SA 610 using the work of internal auditors, there are few things that an auditor, stat auditor, needs to consider before relying upon the work of an internal audit. So those things are, first of all, we need to understand before we can rely upon the work of internal audit. What we need to understand is that what is the IA organizational status and the objectivity of the IA, understanding the level of competence of the internal audit function. Okay, whether the internal audit applies a systematic discipline approach including quality control. So if no to all the three, that is the organizational status, competency, and systematic and discipline approach, so OCA basically. If no to above three, means if anything is no from the OCA, then we cannot use the work of internal audit. So to use the work of internal audit, you need to check three things: O, C, and A, that is organizational status, competency, discipline, and systematic approach. If that is being performed, if that is being followed by what you can say IA, then it is fine. Otherwise we cannot rely upon the work of IA. Engagement auditors shall make all the significant judgment to prevent the undue use of work of internal audit function. Okay, so if there is a significant judgment or areas that are critical risk, then in that case we should not be relying upon the the work of internal auditor. Over there it is the external auditor, engagement auditor's responsibility to perform the audit. So where more judgment is involved, planning, performing, or evaluating the audit evidence, or where the risk assessed of the material misstatement is high or special, where there is a significant risk, I am not required to use the work of internal audit at that particular point in time. So I'll not use. If significant judgment or if critical areas or high risk of material misstatement plus significant risk or significant risk. In both of the areas, I am not required to use work of internal audit. Now the question comes is where and how I can use the work of internal audit. So there are three ways you can use the work of internal audit. Okay. Number one, what you can do is, first of all, when you want to use the work of internal audit or you want to rely upon the internal audit, how you can use the work of internal audit? It's simple. Let's say, for example, that's an internal audit function. Either you can basically coordinate with the internal audit function, okay, coordinate with the internal audit function while performing your audit. Second, you can read and rely upon internal audit reports. Third, you can ask internal audit to perform additional procedures for you. So you can do three things. Either you can, coordinate with the internal audit, and you can rely upon the work that is being performed by the internal audit. Okay. Second, you can read and rely upon the internal audit report. Third, you can ask internal audit to, provide you direct assistance. So this is known as a direct assistance method. Where internal audit will work for you. In first two methods, what you do is, let's say in this method, you rely upon the work already performed by IA. But the reliance is also subject to certain conditions. Okay, you need to perform additional procedures before you can rely. So star mark. And this is simultaneous audit. We known as a simultaneous audit means we test together with IA. So IA tests separately and we also test separately, but that is the coordination by way of coordination. So both working together. Now, when you purely rely upon the work of internal audit that is being performed by them, this one, the second condition, you need to take care of certain things before you can rely upon the work of internal audit. So that is, first of all, whether you can you need to consider whether you can rely upon the work of internal audit. That is, first one, whether OCA is present. That is this one, organizational structure, competency, and discipline and systematic approach that has been present and followed by IA. Second, work performed and planned by internal audit was appropriately supervised and documented. So work was appropriately documented. You can also check whether sufficient and appropriate audit evidence was obtained by IA to reach to their conclusion. Okay, then you can evaluate the conclusion reached by IA are appropriate based on their findings. So you can do these three things, four things before you can rely upon the work of internal audit. Fully rely. So that was something, like here, if I show you, EA shall perform, when I use EA, it's an engagement auditor, shall perform sufficient and appropriate procedures to evaluate whether the work can be used that is being performed by internal audit, understand whether the work of IA was properly planned, whether the IA has obtained sufficient and appropriate audit evidence to draw their conclusion, whether the conclusion reached are appropriate based on their finding. If yes, then we can rely upon the work of internal audit. Now, when the direct assistance can be used, unless prohibited by law, IA can directly assist engagement auditor. Engagement auditor shall assess threat to objectivity and competency of IA, obtain written agreement from the entity, obtain written agreement from the internal audits, direct, supervise, and review the work performed by IA means it shouldn't happen that management is coming into the picture before IA is reporting to you. When I talk about direct assistant, is the direct, that is IA reporting to the external auditor or engagement auditor. Management is not into the picture for the time being. Okay, so IA reporting to EA. Management should not interfere. So this is all about essay 610 using the work of internal auditors. We have also considered this when we were discussing upon chapter of the internal audit. At that particular point in time also we discussed some portion of the this particular essay. So I'll not go into further detail for this essay. I'll shift to the questions of this essay. Okay. Before I shift to the questions, any doubt? Any doubt? If he's providing direct assistance, yes, he can. So there is one question. Internal auditor scope is determined by the management. Can he do additional procedures of stat audit? See, generally, if he's doing for the stat audit and he's providing direct assistance, then in that case, whatever the external auditor are requiring him to do, he will do it. But if he has to perform in the capacity of internal audit for the management, then that totally depends upon the management and internal audit. Any doubt? Any doubt? Okay. If no further doubts, then I can move to the next. I can move to the questions. Okay. But before I go to the questions, I just want to show you guys something with respect to the internal audit report. One of the internal audit report that I have from the template, I have the template for them. That's how it looked like. Just a minute. Let me open that particular audit report. So I just want to show you the front, the first page of the internal audit report, how it looked like, so that you can have an understanding. Okay. And these are the reports then the auditor rely upon. So generally in an internal audit report, what happens is you get an executive summary, like what is the particular type of audit that is being performed. Mhm. Hello, everyone. Sorry, there was some issue with respect to the some IT part. So I could see, there was a portion that Evan was explaining the internal audit report. It went down. No issues. I'll explain the internal audit report again, how we rely upon, and what are the things that we are required to consider when when the auditor looks into the internal audit report. See, on the screen, you can see the first executive summary of the internal audit report. Basically, this executive summary provides the background that what internal audit has performed as a part of their procedures, what areas they have reviewed upon. Okay, then it comes upon the findings, their findings, and when it comes to the finding of the internal audit, they provide area wise finding. Okay, what is the finding basically, in which area, what is the detailed finding, and accordingly they provide whether it's a control issue, there is a design issue, performance issue, exception issue, what kind of exception is there. Let's say, for example, in this case, accounts payable. Okay, now when I say accounts payable, there was a finding with respect to, I show you here. Okay, one observation where controls were operating exceptions were found in operating efficiency, and two observations where control design exceptions were found. Means in case of accounts payable, controls where either there was an operating exception or there were design exceptions. Now, as an external auditor, when I will receive this particular report, what I will do is I will go through that report. I'll see, okay, account payable, there is an observation on the control side. And accordingly, what I will do is, if there is an observation on the control side, I will, tune my risk assessment to in such a way that I should not place any reliance upon the controls, because already internal audit has identified exceptions in respect to what you can say, the control area. So, for example, in account payable, let's say there are two areas where there are two particular areas in account payable. Hypothetical example: one is vendor reconciliation, second is payment to vendor. Now, whatever observations were identified with respect to, let's say, vendor reconciliation. There were observations by internal audit. Okay. Now, there are no observations with respect to payment to vendor. So control are working fine. So what I will do is, when I will prepare my audit plan, okay, what I'll do is I will not rely on the controls with respect to the vendor reconciliation. If I say not no reliance on controls, or less reliance basically, okay, or less reliance, in that case what will happen is, my audit evidence that I need to gather from the substantive procedure will increase. Okay, I need to gather more audit evidence from substantive procedure, because I cannot rely upon the control now. That is there in something in the audit report, internal audit report itself. So more evidence from substantive procedures, plus even I can keep my risk assessment on the higher side, because controls were not operating effectively or they were not designed effectively. One of the factor, remember, in the risk fraud risk factor, there is an opportunity element also. This is an opportunity element. Okay, there is an opportunity because controls are not effective, they are not designed effectively. Design efficiency, design effectiveness is something which prevents the opportunity. But if design is not effective, then there is a fraud risk factor also. So I can also consider fraud risk in this scenario and can keep my risk assessment on the higher side. So this is how basically the external auditor reviews the report of the internal auditor, and it considers, this is how it considers in their risk assessment planning or planning phase. Any doubt? Any doubt till now with respect to the internal audit report or any other topic that we discussed? Okay. If no doubts, then let me take you through the questions for this particular topic, because again, based on the questions, we will be having more clarity on this particular topic. And on the same line, we have already discussed the essay, so the questions will be also on the same line. Let us see one of the question first. During the audit of PQR Limited, the audit team decided to evaluate whether to use the work of internal audit function to gather sufficient and appropriate audit evidence for the purpose of expressing opinion on the financial statement of the company. Upon understanding the internal audit function structure, policy, and procedures which support the objectivity of the internal audit function, the external audit team identified that the internal audit function reports directly to the management and do not have any direct communication with those charged with governance or any officer with appropriate authority. Very important point to note. The point is that external audit team identified that the appropriate authority. Also, the external audit team identified that all the findings of the internal audit function are first reported to the management, and then the management decides what to report to those charged with governance from the findings of the internal audit function. So here the observations are filtered by the management basically. So first they are reported to the management, and then management decides what to report to those charged with governance. It was a clear indication available to the external auditor that there was a lack of ability to perform the allocated task without any conflict of interest or without due influence for the internal audit function, which was negatively impacting their objectivity. So negative impacting their objectivity, fine. However, the external auditor team still decided to rely to use the work of internal audit function in the areas where more judgment was involved or where the risk of materials misstatement was assessed as a higher level. You are being one of the engagement partner of the audit team. Kindly guide the audit team regarding the use of work of internal audit function as per SA 610 by selecting appropriate option from below. Let's not go to the option first. Let's first discuss. Now there is a negatively impact on the objectivity, and auditors decide to rely upon the use of work of internal audit function in the areas where more judgment was involved and where risk of material misstatement was assessed as a higher level. You tell me whether this reliance is appropriate or not. So my question is whether this reliance is appropriate. Very important thing to understand. Whether this reliance is appropriate or not. Come on, guys. So when I talk about the reliance, remember we talked about 3 factors that we need to consider before the reliance. OCA, organizational status, competency, and the approach. When I talk about organizational status, it's the status that here comes into the picture. Okay. Now, what is an organizational status generally from the OCA part? Okay. Organizational status means that where the internal auditors lies in an organization to whom they report, to whom they have access to. If they cannot have the access to those charged with governance, okay, then in that case, it's an issue. They don't have an appropriate, organizational status. That's the main concern over here. Over and above that, in the current case, when I talk about objectivity, okay, that means, internal audit being is able to perform the task without any bias. If the internal audit can perform the task without allowing any bias or conflict of interest or undue influence, so that they can, others can override the judgment of the internal audit, in that case, we can say there is an objectivity of the internal audit function. But here in this case, it's not an objectivity. Reason, because management decides what to perform, management decide what to report. They have a direct influence, undue influence on the internal audit, and accordingly, we can say that, the objectivity is not present. Okay, based on these two factors, with organizational status, that the function's authority, accountability, supporting the ability of the function that is free from bias, conflict of interest, undue influence, okay, those all things decide whether we can rely upon the work of internal audit or not. Now, if the OCA, if any of the element from the OCA is not present, we should not rely upon the work of internal audit. Now, here the question is reliance in case of areas where there is more judgment involved or higher risk involved. Even there is an OCA, we should not rely in the areas where more judgment involved and the higher risk of material misstatement is involved. So in this case, we should not be relying upon the internal audit. So whether the reliance is appropriate, answer is no. Even there was objectivity, even there was everything fine, organizational status, we should not rely on the areas where there is more judgment involved and where the risk of material statement which is assessed, that should be at the higher level. Okay, irrespective of that objectivity thing. Clear? So in this case, the reliance is not appropriate. Let's see the options also. The external auditor shall not use the work of internal audit function if the external auditor determines that the internal audit functions, organizational status, and the relevant policies do not adequately support the objectivity of the internal audit. The external auditor shall not use the internal audit if the external audit determines the internal audit functions, organizational structure, and relevant policy do adequately support. Here they do not. So this is not appropriate, basically. The external audit shall use the work of internal audit function if the external auditor determines that the internal audit function does not apply systematic approach. That is wrong. In that case, we should not. The external auditor shall not use the work of internal audit function if the external auditor determines that the internal audit function does lack sufficient competency to discharge their duties. Okay. So in that case, if the internal audit functions does lack sufficient competency to discharge their duties, we should not use the work of internal audit function. Okay. And here, but the question is about objectivity. So the correct option will be option A, because it's talk about the external auditor shall not use the work of an internal audit function if the external auditor determines that the internal auditor functions, organizational status, and the relevant policy do not adequately support the objectivity of the internal auditors. So that's the correct one. Clear? Any doubt? Any doubt with respect to this or any of the question? Okay, so there is one question. Whether objectivity is covered in OCA and where. Okay. So objectivity is part of OCA. Basically, see, I'll come to that question with respect to the objectivity covered in OCA. Reason because that is my next question over here. Okay. Okay. But just to summarize, when I talk about organizational status, at that particular point in time, the objectivity comes. Okay. So that is the organizational status which gives talks about the objectivity. I hope I am clear. Any further doubts? Okay. If no further doubts, let me proceed to the next question. Now, again, the question on particular area, that is objectivity that we are talking about. Okay. Let me show you. Just a minute. Yeah. So the question is, objectivity refers to the ability to perform those tasks without allowing bias, conflict of interest, or undue influence of others to override the professional judgment. Specify the factors that may affect the external auditor's evaluation of internal audit function. So you need to specify the factors, okay, that may affect the external auditor's evaluation of the internal audit function. Which are the factors that affect the evaluation of external auditors with respect to of internal audit function? Now, these are the factors of objectivity. Let us see which are these. First, whether the organizational stature of the internal audit function, including the function's authority, accountability, support the ability of the function to be free from bias, conflict of interest, or undue influence of other to override professional judgment. For example, where the internal audit function reports to those charged with governance or an officer with appropriate authority, or if the function reports to the management, whether it has direct access to those charged with governance, whether the internal audit function is free from any conflicting responsibility, for example, having managerial or operational duties of responsibility that are outside the internal audit function, whether those charged with governance oversee the employment decision related to the internal audit function, for example, determining the appropriate remuneration policy, whether there are any constraint or restriction placed on the internal audit function by management or those charged with governance, for example, in communicating the internal audit function's finding to external auditor, whether the internal auditor are member of the relevant professional bodies and their membership obligate their compliance with the relevant professional standards relating to objectivity, or whether their internal policies have achieved the same objective. So these are certain factors that basically helps to understand the objectivity of the internal audit function, and one of such factor is organizational status. So okay, so one of such factors is organizational status, and this helps us to understand the objectivity. Now, what is objectivity? That is something refers to the ability to perform the task without allowing bias, conflict of interest, or undue influence. So that is an objectivity basically. And if you want to, if the external auditor wants to evaluate the objectivity of internal audit function, he needs to look these certain examples to understand the function. Clear? Any doubt? Any doubt with respect to this? Okay, good. If no further doubts, what I suggest is let's take a quick 10-minute break, and after the break, we can gather back and continue the session. Okay, let's take a quick 10-minute break. Hello everyone, welcome back. So let's continue with the next topic, that is SA 620, using the work of an auditor's expert. Remember, we saw management expert in SA 500, how to rely upon the work of management expert. So what are the things we need to check when we are evaluating the work of work performed by management expert? On the same side, we have work of an auditor's expert. Explain you in the brief, and then we'll more focus on the practical side rather than on the theoretical one. Okay. Now, when I talk about management expert, that is an expert hired by the management that is dealt to be in SA, as per SA 500 audit evidence. Now, when an auditor appoints an expert, auditor usually appoints an expert for an area that is other than accounting and auditing, because for accounting and auditing, we are the expert. Okay, so it's an expertise other than for the accounting or auditing. And that is the work to be used to assist the auditor in obtaining sufficient and appropriate audit evidence. Okay, now when I using appropriate methodology, objectivity, nature, timing, extent of his work, so all these areas we are required to see. Okay, but before we appoint the areas where we need an expert. Okay, now the areas that require or you can say some specific engineering related, some sort of those areas where you might appoint an chartered engineer, actuary, or some other kind of expert for that particular purpose. Now, a lot of expert to perform. Today, you cannot say, okay, please engineer, come and perform, please provide me your expert advice. No, you need to from that particular, expert, okay, the nature of the particular subject matter which is there, the risk of material misstatement or fraud, significance of his expert's work, okay, your knowledge about the expert's area, then previous experience with that, working with that expert. So all these factors are there which helps you to determine whether you should go with an expert or not. So let us quickly see. Determine if the expert required for the field other than accounting and auditing to obtain sufficient and appropriate audit evidence. Determine the nature, risk, significance of expert's work in overall audit opinion. For the overall audit opinion, how the expert work is significant. Let's say, for example, simple example, you are doing inventory count. Now, inventory is nothing but petroleum and oil products stored in tanks. Now, usually you cannot count, petroleum or how much petroleum is there, the temperature or the density. If I tell you, okay, check the density of the petrol, which grade of petrol it is. As an auditor, it may be difficult for you to, to comment on that. That's why you might require, a particular expert who is expert in chemical, petroleum, and oil to understand, okay, whatever the product is management claiming is the same product which is lying in that particular tank. So significance of the expert's work, basically. So here the significance is the inventory area, without which I cannot provide an assurance in the inventory area. Auditor's knowledge of about the matter, previous experience with the audit from the expert. Okay, then competency, capability, and objectivity of the expert. These are certain areas which helps you to finalize whether you want to go with the expert or not. Now, when I talk about objectivity, as we saw earlier, to evaluate the objectivity of an expert, you need to inquire with the expert regarding his relationship and interest in the company, relationship with the business, interest, financial interest, and provision of service. And you may also obtain written representation from expert with respect to his objectivity. Okay, capabilities, again, you can see qualifications, his experience, and all those stuff. And competency, again, what previous assignment he has done, on something on background about that particular expert. So by this way, you can evaluate competency, capability, and objectivity of the expert. Now, when you are using the work of an expert, now that was in selection. Now we are using the work of an expert. What are the things that we need to take care while using the work, basically? Okay. When you want to use the work of an expert, let's say, for example, he did the count for you. Now you want to use the count that of petroleum product that he did. What you would like to first see is area of expertise relevant to the audit purpose. Yes, he's an expert in counting, petroleum products. That is relevant for my audit purpose. Fine. Whether any law, standard, regulation applicable to expert for his work. Let's say, for example, for us, these engagement and quality control standards are applicable. Same way, whether for that expert any such standard is applicable. Assumptions and method used by expert. Okay. So, what is the assumptions that the expert used, and what are the method that the expert used? For example, assumption can be, like, okay, this much temperature or density, or in case of a petroleum product, this much capacity of the tank is fully there. And when I talk about, method, how he measured the petroleum product by rod stick, by automatic, calculations or something like that, recalculation or what is it. Then the question comes is data used by expert and its completeness, accuracy, and relevancy. Okay. So what is the data that the expert has used? How he has ensured the data is complete, accurate, and relevant. That is very important. The relevance and the reasonableness of the expert's finding with another audit evidence. Let's say, for example, expert says that, okay, this much petroleum inventory is there. Let's say, for example, 50 tons. Okay, 50 tons of petrol or 50 barrels, or whatever measurement unit it is. Now, let's say, for example, this is the inventory calculation by expert. I can correlate with, let's say, management, what inventory report is, or you can, correlate with some other data which is available. Let's say subsequent sales. Okay, whether the subsequent sale of that much petroleum has occurred or not, for example. So there, whether I can, correlate the findings of the expert with the other audit evidence. If the work performed by expert is not adequate, then agree with the expert to perform additional procedures or perform additional procedure as necessary. So let's say, for example, expert can only provide you, let's say quantity, but subject to very vague conditions. Now, either you perform the additional procedure or ask expert to perform additional procedures. Okay. Now, question comes is, like we saw with the component auditor, that we provide reference in our audit report. Do we provide reference for the expert? Answer is no. We do not refer the work of expert in unmodified audit opinion unless required by law. So if it is an unmodified audit opinion, we'll not refer the work of an expert. If we are referring the work of an expert in unmodified opinion, we need to mention that this does not reduce my responsibility as an auditor. Okay, this does not reduce the auditor's responsibility, because we are relying upon the expert, but at the end, we need to make sure that the work that is performed by expert can be used by an auditor. In case of modified opinion, and if it is necessary to refer the work of an expert, then again we will mention that it does not reduce my responsibility. Let's say, for example, in case of inventory, expert says the inventory is only, let's say, 600 barrels petroleum, okay, is there, but management report says no, the petrol should be 1000 barrels. So there's a difference between calculation. Now in that case, if I want to refer this to my observation, if I need to refer to the work of an expert, I need to say that, okay, this does not reduce my responsibility, but based on expert's work, this is the observation I have identified. Any doubt? Any doubt? Correct. Yes, correct, Marini. Kaushiki, same. Objectivity will be same like it was in there in the internal audit case. So it will be the same only. But here, when we are talking about objectivity of the auditor's expert, we need to understand. See, objectivity is same, that they should be, free from conflict of interest, undue influence. They should not allow any bias in their decision making. Objectivity will be the same, but the way to evaluate will slightly change. Okay. Over there, we were seeing about the relationship between the internal audit and the management. Here, we will see whether any relationship between the expert and the company is there or not, financial or any other type of. So there is one good question, whether expert's opinion is binding on the auditor. No, it's not binding on the auditor. But if auditor has sought any consultation, okay, then in that case, or sought any expert opinion, then he needs to document how he has dealt with that opinion. And if he is not relying upon that, then why he is not relying upon that. You can identify that into SA 220 and SQC 1, where it talks about the consultation. Okay, expert opinion is not binding on the auditor if he's not satisfied with the work. Any doubts with respect to this? Okay, another good question. Basically, can management ask expert to perform any additional procedures, or what if management stops expert? It's like same with respect to auditor. It's same. So if management doesn't allow expert to perform the procedures, in that case, any further doubts? If no further doubts, let us see some questions on this particular topic so that we can have more clarity. Okay. So I have a sort of small question, case study, sort of small one. In the audit of MNO Limited, the audit team, okay, decided to appoint the auditor expert for understanding the accounting and evaluation of complex financial instrument. So here it's talk about complex financial instrument. Post appointment, the audit team discussed with the expert the nature, timing, and extent of the work required to be performed by expert to gather sufficient and appropriate audit evidence regarding the significant risk identified in the complex accounting and valuation of financial instrument. Okay. Then, as agreed, the expert performed the necessary procedure to validate the valuation and accounting of financial instruments. Upon completion of the procedures, the auditor expert submitted his report to the auditor to enable to issue the appropriate audit opinion. Upon submission, none of the team members were enough competent to validate the expert report and hence relied the same without performing any procedure. So, relied upon without performing any procedures. Okay. And the scope of work was understand the accounting and valuation of complex financial instrument. Okay. Post issuance of the audit opinion, it was identified the valuation and accounting done by management for complex financial instrument were incorrect and no observations were identified auditor or expert in that. Upon inquiry by those charged with governance, auditor explained that none of his audit team member was in. Auditor also presented the report of the expert which contained no observation. However, those charged with governance were not satisfied by the answer of the auditor. As a result, demanded to verify the working paper prepared by the expert. Auditor explained them that the working papers of expert are not property of auditors and are not part of the audit work papers, and hence the same cannot be shared with them. Those charged with governance has approached you to understand the auditor's responsibility in the current case. Now, I will post some question before we go to the MCQ. Question number 1. Okay. Now, here auditor concluded that his team member were not competent enough to validate the, the expert's opinion. Okay. So the auditor contended that none of the audit team members were enough competent to validate the work of expert. Hence, no additional procedures were performed. In the light of SA 620, none of the audit team members were enough competent to validate the accounting and valuation of the complex financial instruments. So I think, Manini, this question will help you to understand your query. Come on, guys. Whether this particular we discussed on this particular topic also right now. Come on, I'm waiting for your answers. See, here auditor is not correct. Reason because we saw just auditor needs to use, some used by expert. Ask him to perform additional procedures, or auditor needs to himself perform additional procedures. Over and above that, auditor needs to, report even that this blindly relied upon the work performed by expert. How he can say that he's not, reducing his responsibility? He should have performed the additional procedures. Let's see the option. Any doubt? Okay, so there are questions. If auditors does not have adequate knowledge about any specific area, then can he rely upon the experts? No. If he doesn't have the knowledge, he should perform still some procedures to ensure that the work performed by the expert is complete and accurate. See, this essay helps to rely upon the work of an expert, but provided that he has performed those additional procedures that are required. Means he should understand that the assumptions and the method that has been performed by the expert or used by the expert, law standards any applicable, data used by the expert, relevance and reasonableness of the expert's finding. It is not expected from the expert, that what you can say, that he should basically re-perform the audit. Clear? I hope I'm clear. Any doubts? So there is another question. Auditor take appropriate evidence that the expert view is right or not, and auditor follow this thing with others. Then what is the difference in is in expert of an auditor and I think expert of a management? Okay. See, in case of an expert of a management, you take that work performed by expert as in data or information, but you do not take an evidence. Okay. When you take work performed by your expert, you may take an evidence based on the assumption, method, data used by the expert. Here, it is not asked from you to perform the recalculations and re-performance of all the, the work that is performed by the expert. In case of management expert, it is expected that you should have also, recalculated, re-performed, or either, perform some procedures, okay, by using the same data, same assumption that the management expert has used to compare the outcome of the management expert and your calculation. Remember, point estimate, auditors point estimate, management's points estimate, auditors range. So we are required to calculate an estimate in management expert, but not in auditors expert. Also, in this case, one of the thing is auditor appointed the expert to understand the accounting and valuation of complex financial instrument. Now, accounting and auditing are such areas where auditor is himself considered to be an expert. Okay, now if he will appoint some other expert and he will rely upon that, then it will be not appropriate. Let's see second question, very important. Auditor contended that the working papers prepared by the expert are not part of working papers, audit working papers. In the light of SA 620, kindly guide those charged with governance whether the auditor's explanation is valid. So you need to tell me whether the working papers prepared by the expert are audit working papers and whether that can be shared or not. Whether those are working papers are here auditor is saying that are not part of audit working papers. So whether they are a part of audit working paper, if yes, then that can be shared or not. Come on, guys. Whether that working paper can be shared or not. Okay. Good, Manini. Good, Shailendra. Okay, correct. Correct, Shailendra. Okay. So let's see the options. In normal circumstances, working paper prepared by the auditor expert are part of audit working papers unless a contrary agreement is entered between the auditor and auditor's expert. Hence, the auditor is incorrect in the current case. The working papers shared and prepared by the expert are property of auditor's expert and cannot be shared with the management or those charged with governance, and auditor contention is correct. The auditor is correct in the current case that the auditor has no right to retain the working papers prepared by the expert. Only the work papers prepared by the auditor is required to be retained by auditors. The auditor is incorrect as it is the responsibility of auditor to provide all the working papers to the management or those charged with governance during the audit. See, if you are taking something as an evidence, okay, means you are required to take that particular thing or the background of that thing into your work paper. If I'm relying upon the expert's report as an evidence, I should have the working paper prepared by the expert as an as a part of audit working papers. Otherwise, how will I ensure that the data, assumptions, laws or regulations, findings, whether they are appropriate or not? I need to understand all these things in detail to conclude whether the expert's findings are reasonable and relevant. Unless and until I do not have the working paper, how will I come to conclusion that okay, these are relevant or not? Hence, they should be part of the audit working papers. Okay. Unless and until there is an agreement contrary to that. That is, unless and until there is an agreement between expert and auditor that he will not share any such working papers. But usually it is not the case. In all the agreements, in most of the agreements, they are shared with the auditor and they are preserved as a part of audit working file. So the correct option is 1, not 2, not 3, and not 4, because working papers are, responsibility of the auditor, property of the auditor. They are not required to be shared with the management unless and until, auditor himself shares it. But management cannot compel auditor to share. And that's why 4 is also incorrect. Any doubt? Any doubt? Okay. If no further doubts, then let me take up one more question. Okay. Very important one. This is not directly related with the expert, but very good to understand the background between expert and auditors. Auditors expert and the auditors, the agreement side. Okay. So basically the question is, kindly suggest the need for more detailed agreement than would be otherwise be the case between the auditor and auditor's expert, or for the agreement to be set down in the writing. Which are the things which can have require the auditor or an auditor's expert to have a more detailed agreement between them. So more detailed agreement. Now that can be auditor expert will have access to the sensitive and confidential entities information. If he wants to have them, it should be set out in the detailed agreement. The respective roles and responsibility of the auditor and auditors set out that in detailed agreement. Multi-jurisdictional legal or regulatory requirement apply. Matters to which auditor expert work relate is highly complex. The auditor has not previously used work performed by that expert. The greater the extent of the auditor's expert work and its significance in the context of the audit. So these are certain factors which need for a more detailed agreement than otherwise between the auditor and auditor's expert. So the second option, so there is some question on the second option. Why second option is incorrect? Reason because it says that working paper prepared by the auditor's expert are property of auditor's expert, not the auditor. That's why. But it should be part of the auditor's work paper, and it should be, with the auditor. They are although property of auditor's expert, but they should be part of auditor also. And auditor should have access to that. That's why it's incorrect. Clear? Any doubt? Any doubt? Okay. If no further doubt, let me take one more question on this. Very good question. Okay. So the question is KRP Limited. Okay. KRP Limited in its annual general meeting appointed Mr. X, Y, Z as a joint auditor to conduct auditing for the financial year 15-16. For the valuation of gratuity scheme of the company, Mr. X, Y, and Z wanted to refer to their own actuaries. Due to difference of opinion, all the joint auditors consulted their respective actuaries. Subsequently, major difference was found in the actuaries report. Mr. X agreed to the Mr. Y's actuary, though Mr. Z did not. Mr. X contended that Mr. Y's actuary report shall be considered in the audit report due to majority of the votes. Now, Mr. Z in dilemma. You are required to decide the responsibility of X and Z in case of the report made by Y's actuary later on found faulty. So again, basically, very good question to understand the the division of the responsibility and the role of the auditor's expert. So Mr. X, Mr. Y, Mr. Z, three were there. Now they all refer to their own actuaries. Okay, let's say ABC. Now, due to the difference of opinion, all the joint auditor constructed their actuaries, and subsequently there was a major difference found in the actuaries report. Mr. X agreed to Y's actuary report. So A and B's actuary report, they agreed to one. Let's say they might have agreed to A's actuary report. So they preferred A in this case, or let's say B. B's report in this case. However, Mr. Z did not. Mr. Z still wanted to go with the C's actuary report. C actuary report. Okay. Now, Mr. X contended that Mr. Y's actuary report shall be considered final. Means whatever actuary report prepared by Y's auditor's expert, that is Mr. B, shall be considered final. And Mr. C wanted that no, the actuary report of Mr. Z wanted that no, the report prepared by Mr. C should be considered final. So in this case, what should be done? You tell me what is required to be done in this case. Whether Mr. Z should agree to B actuary report, or he should go with C actuary report. Now we have a majority between Mr. X and Y. Okay, they both agree to Mr. B's report. Mr. Z is want to agree on the C's report. Absolutely correct, Kaushiki. So there are two things here in this particular scenario. I'll bifurcate this scenario in two cases, or two basically things. One, audit with respect to audit report, that is SA 299. It's not about the majority, they can have a separate audit report. And common audit report of Mr. X and Y, and separate audit report of Mr. Z. That is fine if he don't wants to go with the Mr. B's actuary report. Now the second question comes is, relying upon Mr. C's report, or who is the actuary of Mr. Z. Now see, what we saw is, if there is any evidence available to the contrary, okay, if any, we need to understand where the relevance and the reasonableness of the expert's finding with another audit evidence. Now, in this case, by applying SA 620, I need to compare with other audit evidence. That is Mr. A's and Mr. B's actuary report, or you can say Mr. B before, because it was taken final. Okay, and after comparing, I need to understand whether the findings of the expert are reasonable and relevant? If yes, then I can go for a separate audit report as per SA 299. Then I can rely upon my expert, that is Mr. C, and then I can go for a separate audit report. So there are two things into the play. One, whether I can rely upon Mr. C as an expert. If yes, because I have other evidence contrary to that. If yes, then I'll go to SA 299. I may ask for separate audit report, and I can ask Mr. A and Mr. X and Mr. Y to issue common audit report. Clear? Absolutely correct, Shailendra and Manini. So Mr. Z should go with C. He first needs to evaluate reasonableness and the relevancy, then can go for separate audit report. Any doubts with respect to this particular topic? SA 620. Any doubt? Okay. If no further doubts, then what I suggest is I'll move to the next topic for today, that is SA 700. Okay. And we'll start now the 700 series. Okay. Again, what my focus will be more onto the practical side rather than theoretical side. Sorry. More onto the practical side rather than the theoretical side. Okay. Now, what I usually prefer with is that when I'll explain the 700, I will show you the live report, audit report, and accordingly that we'll go based on that particular report. Basically, what SA 700 talks about, okay, SA 700 talks about your unmodified opinion or forming an opinion and reporting on financial statement. Now, when you form an opinion on the financial statement, there are certain things that you need to take care while forming an opinion. Basically, this essay helps us or help in understanding how to form an opinion. Like, for example, okay, when I talk about forming an opinion, so I'm talking about forming with respect to written. An opinion is the conclusion. So it's talk about the written conclusion and reporting on financial statement. So providing your written conclusion on financial statement, that is something we are going to discuss over here. What opinion we are talking about is we are talking about reasonable assurance, whether the financial statement are free from material misstatement and free from fraud and error. Okay, whether the sufficient audit evidence has been obtained to to form and express an opinion of reasonable assurance, whether the total uncorrected misstatement is material or not. If your uncorrected misstatement is material, then you need to understand what could it be its impact on the audit report. You need to report whether financial statements are prepared as per the applicable FRS. Okay. Then whether FS disclose the significant accounting policies, whether accounting policies are as per applicable financial reporting framework, whether estimates that are by management are reasonable, whether the information presented in financial statement is relevant, reliable, comparable, and understandable. That is RRCU. Relevant, reliable, comparable, and understandable. Whether adequate disclosures to enable user to understand material transactions is done. Whether the terminology and title used in financial statement are appropriate. And if FS drafted as per the fair presentation framework, then whether the fair disclosures are made. So all these things are required to be checked when we are issuing opinion. Okay. We cannot just issue opinion, but we need to check all these things. And when I talk about, obtaining sufficient and appropriate audit evidence as per SA 330, that is to perform all the necessary audit procedures. That is to perform all the necessary, you can say activities, which may include my going concern assessment, which may include considering subsequent events, which may include, relying upon the auditor expert. Once I have all that evidence with me, then I'll understand whether that particular evidence, whether any misstatement are there. If total uncorrected misstatement are material, then what is the impact of that total uncorrected misstatement? And all such other things accordingly will move. So this is how, when I'm forming an opinion, these all things I'm required to check. Sorry. Okay. Now, there are certain things which are minimum required in an opinion or an auditor report. Okay. Which are these things? Rather than, going from the theory, I'll show you one live audit report and then we will see. So this is a live audit report, one of the, published public audit report. Now, when I talk about audit report, what are the contents? What should be there in the audit report? Number one is the title. That is an independence auditor report of the independent auditor or independence auditor report. The title is very important and it should disclose that it's an independent auditor's report. Independent word is very important. Okay. Then, to whom it is addressed? It is addressed to the members of the company. See here, members of the company. Okay. Then, what is my opinion? The next important and the first, you can say, very, very critical thing is the opinion. What is the opinion over here? In opinion, I need to specify certain things. EA, T, and P. That is entity, financial statement, and I need to first identify the entity. Okay. That is, this is the entity that has been audited. I need to identify the financial statement which are audited. That is the balance sheet of 31st March 2021, statement of P&L, cash flow statement, and statement in changes of equity, along with significant accounting and policies and other explanatory information. That is the second part. Okay. Let me differentiate so that you will be able to understand. That's the second part I'm talking about. Balance sheet as at 31st March, statement of profit and loss account, comprehensive income and cash flow, statement of changes equity, summary, and other information. So this is the second part. That is A, basically. So we saw the entity, we saw the basically the audited financial statement that have been there, what we are auditing. The third portion is the title of each FS. So title, again, profit and loss account and all those things that are there. Refer the notes. We saw the notes again over here. If I show you, and other explanatory information. So that's where I'm talking about the notes. Okay, and the policies. P stand for policy. So I need to talk about policy also. Significant accounting policies, that is also there. So EATNP, that is the entity accompanying standalone financial statements. Okay, so over here I have specified the audited the accompanying standalone financial statements, title of each financial statement, notes and policies. That is something I have audited, and that should be part of my opinion. Then next thing I need to provide that what is I have done, what I have done as an in our opinion, like what opinion I am giving. So see over here, in our opinion and best to our information and according to explanation given to us, the standalone financial statement gave the information required by the act and gives a true and fair view in conformity with the accounting principles, including Indian accounting standards specified under this, of the state of the affairs of the company, its profit and loss account, changes in equity and everything. So I'm giving an opinion that it gives a true and fair view. That is the main opinion I'm giving over here. Okay. Then the next area that I'm required to have in my audit report is basis of opinion. Okay. I gave the opinion, I identified the entity, financial statements, everything. I gave what opinion I want to give. Like this is an opinion I'm giving. What opinion? That they gave a true and fair view. My opinion is this. But on what basis you are giving this opinion? It's in the second part. That's in basis for opinion. Now, under the basis of opinion, I need to disclose few things. That is AAINS. That is my audit as per SA, that the engagement and quality control standards, auditor's responsibility, independence of the auditor, and sufficient and appropriate audit evidence. Okay. First, audit in accordance with the SA. So that's the first point I report, that we conducted our audit in accordance with the we conducted our audit in accordance with the standard on auditing specified under section, this particular section. So that's the first A. Then comes the second A, wherein I report upon the auditor's responsibility. Our responsibility under those standards are further described in auditor's responsibility for the audit of standalone financial statement. So I give a reference to my responsibility, auditor's responsibility. Third section, basically. Third section, it talks about, independence of the auditor. That's the I. That is, we are independent of the company in accordance with the code of ethics issued by the ICI and together with the ethical requirements that are relevant for the purpose of our audit. That's the third part. Fourth part, very important again, is with respect to my sufficient and appropriate audit evidence. Okay. That is, we believe that the audit evidence we have obtained is sufficient and appropriate to provide the basis for our opinion. So, four things in basis of opinion, AAIS, that is, first of all, audit as per standards, then auditor's responsibility, then independence of the auditor, and fourth, sufficient and appropriate audit evidence. These are the four things that I'm required to report in my basis for opinion. Any doubt? Okay, so there is one question with respect to the expert only. If the expert report is not correct, then see, if the expert report is not correct, it will come to the point where you perform the additional procedures to validate the expert report. If yes, then you have relied upon the expert opinion and you have performed your reasonable skill and care. Then it will not be, thing upon, basically you. But again, having said that, it should be, that you have applied your reasonable skill and care and you have complied with the standard. What if there is a qualified opinion, then this particular line that gives a true and fair view, how it is written? Okay, I'll come to that. I'll come to that when I'll discuss about the modification. I'll show you at that particular time how modified opinions are written. Any doubt? Okay. Now, the next part that I want to refer is growing concern disclosures that are required. See, in this particular report, basically, I don't have the going concern. This is a basic unmodified opinion. Okay. But I have one more audit report that I will be showing you at the time of qualification, where we will have a going concern also, going concern paragraph. Okay, over there's a paragraph on the going concern that has been there. Okay, just to show you, if I have right now, yeah. But we will be discussing more once we will have, we will be discussing this particular SF 705. See, then comes the going concern paragraph, material uncertainty relating to the going concern. So we have an additional paragraph on the going concern if there is any issue on the going concern. Okay. So after my basis of opinion, I have going concern paragraph. Okay. So the next is going concern. Going concern para. Okay. Then after going concern para, basically, the next thing that is required to be part of my audit report, okay, is key audit matters as per SA 701. This is SA 701. We'll see in while. So I'm required to report key audit matters. I'll basically discuss once at the time of SA 701 in detail how key audit matters are there reported. Okay. Then the next area that is there in my audit report is the other information. I think it's blur for you guys. Is it visible now? Wait. Okay. Now I'll talk about other information. Other information other than standalone financial statement and auditor report thereon. Okay. This other information is the next area that I am required to have in my audit report. Okay. Based on this, I need to then disclose and report upon the other information. And again, this is as per SA 720 other information. When I'll explain SA 720, I'll be explaining in detail what is other information and what we do report in other information. But having said that, this is the next part that I have in my audit report. Okay. Then comes the very important area is management responsibility. So This is the responsibility of management and those charged with governance for the standalone financial statement. Responsibility of management and those charged with governance for standalone financial statement, or you can say management responsibility in preparing financial statement and relating to going concern. So what it contains basically is that, okay, what is the responsibility of the management? How management is responsible with respect to what you can say the preparation of financial statement, then presentation of the financial statement, all the relevant internal controls. So that is some responsibilities of the management that are there. When we are specifying management responsibility, we need to appropriately specify their responsibility, okay, with respect to internal controls, that what their responsibility is, and these are same also part of your engagement letter. So remember, at the time of engagement letter, we understand what is the responsibility of the management. We get it agreed with the management. Okay, this is your responsibility. Same way, that particular responsibility is also agreed when we are or mentioned when we are preparing an audit report. Okay. Now, once we have a management responsibility, then the next area is auditor's responsibility. Remember, we gave the reference over here with respect to auditor's responsibility. This one, we gave a reference that our responsibility under those standards are further described in the auditor responsibility segment. Okay, so we gave that particular reference. Now we need to provide the detail for that particular, like detail about that reference. Like, okay, what is our responsibility with respect to an audit of a financial statement? So here in auditor's responsibility segment, what we do is we provide in detail few things. One, that our responsibility to is to obtain reasonable assurance. Our responsibility is not something that that we will prepare and present the financial statement. No, our responsibility to obtain reasonable assurance. So obtain reasonable assurance whether the standalone financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that includes our opinion. That is our responsibility. That is our responsibility basically. Okay, I think there is some. Wait, give me a minute. Let me. I think you're. It's not clear. Just give me a minute. Just give me a minute. I'll show you some another audit report if this is not clear. Yeah, this is good one. I can show you this one. Okay. See over here, auditor's responsibility. Okay. Now, what is auditor's responsibility basically for the audit of a consolidated financial statement or standalone financial statement? It's same. Okay. So auditor responsibility is to obtain reasonable assurance. Okay. Is to obtain reasonable assurance about and whether the financial statement as a whole are free from material misstatement, whether due to fraud or error, and to issue an auditor's report that include their opinion. That is the auditor's responsibility, basically. First, that to issue, reasonable assurance. Our auditor's responsibility is with respect to the reasonable assurance. Then to issue an opinion. But then we are required to mention that reasonable assurance is a high level of opinion. Like reasonable assurance is a high level of assurance, but it is not a guarantee that an audit is conducted in accordance with SA. Okay, that it is not a guarantee that an audit in conducted in accordance with SA will always detect a material statement when it exists. So we are explaining what is a reasonable assurance, basically. So I said, okay, my responsibility to obtain reasonable assurance plus issue opinion plus my responsibility that I do not give any guarantee. Okay, these three things, and I'll highlight these three things over here. First, obtain reasonable assurance, then issue opinion, that is the second part. The third part is no guarantee. Okay, that it's not a guarantee that all the misstatements which are there, whether material, will get captured and will get detected. So that's why it's a reasonable assurance, not an absolute assurance. Then next, what I'm required to do is I'm required to provide about my professional judgment. Okay, and I'm required to specify what is material, and then professional judgment. Okay, when I talk about material, I need to provide, okay, what is material, basically, from the standpoint of view of audit. So misstatement that can arise out of fraud and error could be considered material if individually or aggregate they could reasonably be expected to influence the economic decision of the users taken on the basis of these consolidated or standalone financial statement. If they impact the decision making, then they are material, individually or in aggregate. Then I'm required to report upon professional judgment, that we exercise professional judgment throughout the audit. Okay, see, professional judgment, that as a part of an audit in accordance with SA, we exercise professional judgment. And the second part I need to report is about professional skepticism. That we maintain professional skepticism throughout the audit. So these are the two things. Then I report professional judgment and professional skepticism. Then I specify about the risk assessment, as in my responsibility. What is my responsibility with respect to the risk assessment? Okay, so basically I'll specify what is the risk assessment, my responsibility with respect to risk assessment. That is to identify and assess the risk of material misstatement of the financial statement. Okay, whether due to fraud or error, design and perform audit procedures. That's the second part. Okay, that is with respect to the risk assessment. And then again I'll specify my responsibility with respect to sufficient and appropriate audit evidence, that it's my responsibility to obtain sufficient and appropriate audit evidence. Obtain audit evidence that is sufficient and appropriate to provide basis of an opinion. Okay, then I'll explain about the internal control. What is my responsibility with respect to internal controls? So in that case, I will provide that obtain an understanding of the internal controls relevant to the audit in order to design audit procedures. So I will understand the internal controls in order to design the appropriate audit procedures. And again, then I will, talk about my accounting policies. What is the responsibility with respect to accounting policy and what is the responsibility with respect to going concern? So let's say accounting policies. So I will report upon, okay, what is my responsibility for accounting policies? See over here. I will evaluate the appropriateness of the accounting policies used and the reasonableness of the accounting estimates and related disclosures made by the management. Then I will talk about, or I will, specify my responsibility for going concern. I will conclude on the appropriateness of the management use of the going concern basis of accounting in preparation of the consolidated financial statement or standalone financial statement based on the audit evidence obtained. Okay, and whether a material uncertainty exists related to the events or condition that may cast significant doubt on the appropriateness of the assumption. So I'll specify about the going concern. So this is I will do in my auditor's responsibility. Obtain reasonable assurance, issue opinion, guarantee. It's not a guarantee. Material, what is material? Professional judgment, professional skepticism, risk assessment, sufficient and appropriate audit evidence. Okay, internal controls, accounting policy, and going concern. All the same things you will find also, in here. Like what is the auditor's responsibility? Obtain reasonable assurance, issue opinion, no guarantee, define material. What is material? Professional judgment, professional skepticism, risk assessment, sufficient appropriate audit evidence, understand internal control, evaluate accounting policy, and going concern validation. Okay. Then the next part comes is the entity component audited by component auditor. Now this goes something with the consolidated financial statement, not in standalone. Okay. So again, this is as per SA just now we saw using the work of another auditor, but this will only be in the consolidated financial statement. I'll show you in the consolidated financial statement. Okay. See in other matter paragraph, that is the audited by other auditors. And then I will specify communication with those charged with governance and then signature date and place. So let's go to the previous audit report. Over here, communication with those charged with governance regarding and among other matters that the plan scope, timing, significant audit findings, including significant deficiencies in internal control that we identified during our audit. That is not but at SA 260 plus 265. Okay. Again, that will be again, this is for the communication with those charged with governance. And this is an important part. Report on other legal and regulatory matters. This report on other legal and regulatory matters is as per the Companies Act or any other legal requirement for the reporting. Usually as per Companies Act. Okay. So it goes with this is my section 143(3) whole This is with respect to Caro. Now it is Caro 2020. Okay. Again, rule 11. Reporting as per rule 11. And then you have name of firm. Okay. FRN, firm's registration number, partner's name, signing partner's name, membership number, very important, UDIN, that is mandatory, date and place. This is what an audit report is and how it is, made. If I go to the notes, same, all these things we discussed are, in a summarized form is there. So auditor's opinion, entity have been audited, title, notes, period, true and fair view, basis of opinion, AAIS, that is audit per essay, auditor's responsibility, independence of auditor, sufficient and appropriate audit evidence, going concern, CAM, other information, management responsibility, auditor's responsibility, communication with those charged with governance, signature, place, date. So this is something how you prepare the audit report. Now, another important part is supplementary information. What is supplementary information? Information that is not required by applicable financial reporting framework. Now, you need to make sure that the supplementary information is clearly differentiated from audited financial statement. It should not be the case, management has inserted supplementary information in the financial statement and people may consider that supplementary information as an audited one. Okay. If management has not clearly differentiated, then ask management to change and differentiate. If management refuses, then identify the unaudited supplementary information and explain that in your audit report that this information is not audited. Now I'll show you one example of supplementary information. Okay. And usually that is kept as a part of your audit report. That is usually should not be part of your present financial statement. And sometimes it may happen that management may include this in your this in financial statements. See. Now this was for the one of the company where there was supplementary information. However, that was separately identified by the management. Okay. So there was a particular supplementary information, adjusted revenue, adjusted EBITDA segment wise, adjusted free cash flow segment wise. Okay. Then there were some other informations also which which usually do not form part of your financial reporting framework, like this way. Some commitments, some detail about prior angel investment and ownership, conflict of interest. This is something that is being not audited. Okay, this is something which is not audited, and as a result, this should not be included with your financial statement or audited financial information. And this should be clearly identified. Okay, this is supplementary information which is not part of your audit report or audited financial statement. Clear? Any doubt? Any doubt with respect to any of this particular that we discussed? So this is how you form an audit opinion, how you write an audit report, how you draft an audit report, basically. Any doubt, guys? Okay. If no further doubts, what I suggest is, in the next lecture, I will be covering the rest of the SS 700 series. Okay, I'll be talking about can, modified opinion, other matter or emphasis of matter paragraph. Okay, and I'll request each and every one of you to read it thoroughly, because my major focus again will be onto the practical side. If you want to, have detailed understanding of this standard, you can also refer to the previous batch lectures and previous lectures that are there for this the same standard. Over there, I have explained in detail about the theory part of the standard. Okay. Please also provide your feedback. That is very important for me. Okay, to understand that if there is anything that you need from our side, and I will be best. I will be trying for that. Okay. Okay, then if no further questions, then thank you guys. Thank you for joining the lecture. I'll see you in the next lecture.